I think that's where a lot of new business owners fall over. They don't understand when taxes are due, when they need to pay it, how much to pay, what causes these obligations. So I think as the year progressed, there are a lot of taxes. Say, for example, your GST and your POY withholding. That sort of put you in a hole a little bit that first couple of years, if you remember.
I definitely do. Yeah.
Yeah, I think the lack of understanding of how to manage cash to put some away for those taxes, to put some away for, say, expenses like rent, those big expenses that you can't escape. I think it's worth new business owners having a look and understanding exactly what they need to put money aside for and what they can't avoid. And we fixed that, I remember, by you setting up multiple bank accounts.
Yeah, that was the strategy.
Yeah. Bucket bank accounts.
I think at the moment, Athletes has maybe 6 bank accounts.
They do.
You've got your operating account, you've got your rent account, you've got your GST account.
Education account,
equipment. Now that all helps, especially again with new businesses, to learn how to budget. You know, let's put some money aside for taxes, which are due each quarter. Let's put some money aside for emergency. Let's put some money aside for rent, because rent is another one that you can't. Another expense that you can't escape from.
Because the biggest issue we had early on, I think, when you inherited and started working with us, is we functioned and operated out of one account only. We had one business bank account where all money came in and all money came out. So there were days where things looked really good, and there were days where things looked really bad. And I remember a moment in time where our rent and our electricity and our tax were all due at the same time.
Yep.
And that was the moment we realized, hang on, I actually don't have enough money here.
That's right.
Yeah.
And I think our strategy back then, Panch, was we actually didn't pay tax. We couldn't afford to.
Correct.
And we had to go on a payment plan.
That's right.
To pay, I think it was GST and a small amount of PAYG.
Yeah, your BASs, yeah.
And I didn't even know what a BAS was, because up until that point, I don't think the company had earned enough to trigger GST. So I really had no exposure to the concept.
Yep.
And it was concerning.
Yeah, it was.
Really concerning.
I remember there was one time I was doing your accounts before a meeting, and it was late in the day, and I was thinking, I really don't want to see Karl and give him the bad news. Like, he's got $30,000 to pay. Yeah. Where's the money going to come from? I'm looking at the balance sheet, which we'll touch on a bit later, and I'm thinking there's not enough cash here. So understanding these things, these obligations, understanding what a balance sheet is, a profit and loss is, having that accounting system is essential for new business owners.
Absolutely.
Essential.
In terms of what you'd recommend for a gym owner or a coach, whether a sole trader or whether they're going to incorporate as a company or they're running it as a partnership, if you were to give advice on someone who is, using their mum to manage their books, or they're using a bookkeeper and then they do their own account at the end of the quarter to save some cash, I feel like that's a huge mistake, because you don't have enough exposure to these systems to understand the nuance and the detail, and you're going to end up putting yourself in a hole, which ultimately we did, and it took a very long time to get out of that.
Yep.
Would your advice be, regardless of the expense, because we have actually an interesting model that we should touch on, we pay you monthly no matter what.
Yep.
So it's a subscription model, which shouldn't be a surprise, because that's how most gym owners want to run their business. Yet they don't want to get support on a subscription model by accountants, by lawyers.
Yep.
We run all our support staff, lawyers, accountants on subscriptions, because it's also how we run our own business. And it's interesting that a gym owner doesn't want to pay a monthly fee to make sure that they've got support whenever they need it. And it's a huge benefit.
Exactly.
I can call you whenever I want.
And the way we see it, by setting up that fee basis, we want you guys as long-term clients. We're not lawyers where we'll serve your case and then see you later. You probably go your separate ways. We're forming relationships here where we want you guys to succeed just as much as we want to help you guys, and I think by setting up that fee basis, not only are we helping your cash flow throughout the year, but at the same time, we're just building this formal relationship where you guys can, like you said, actively reach out to us. Yeah. That on a monthly basis, we're always going to be there to happily meet up for meetings and whatnot in person.
Which we do.
And then, regular phone calls and emails, which Karl, you and I are speaking on a regular basis at the moment, especially when we went
speed
through
dial,
COVID.
Matty. Yeah, speed dial, mate.
So, and that's helped massively. And obviously, as Pancho just touched on with Xero, the fact that we can log in on such a timely basis, and if you ever have a problem straight away, we can log in, see where you are, what's happening online, and we can get around that issue straight away. So
yeah, so you really want to be active.
yeah,
You want to be proactive with these things. I think a lot of businesses, they make the mistake of seeing their accountant once a year. All right, so the year's done. Right?
It's all happened at that point.
You could be doing your financials and tax returns 6 months later. Now, how's that going to help? All I'm telling you is how much tax you're going to pay. And you might not even have that cash. So what you've done, one of the great things that you did was you insisted on monthly meetings, right? And that way we were able to plan. All right, we've got a budget. All right, so how did we go last month? You can monitor those goals. You can see where you went wrong.
And I insisted out of pure ignorance as well. I simply needed the regular feedback early on, especially to know, am I veering this down the wrong path? Are we spending too much money? Are we not regulating things? Are the things that we're missing out on or we're blind to? Because we simply, a gym owner isn't a business owner. Gym owners are coaches who, for whatever reason, fall into gym ownership and start running a business. Like a very small percentage of gym owners have done MBAs or have been accountants or have dads that are lawyers. Most of the time it doesn't happen. You know, most of the time we're PTs who fall into ownership of a business, and we are so out of our depth here. And one of the best things you can do early on is get regular recurring support for this.
Don't see your accountant as just someone you meet at the end of the year and they just do your taxes and that's it. My best advice is to new owners anywhere out there, it's to view your accountant as a business coach. We're there to help you and we're there to guide you through all avenues of life, whether that be personal or whether that be business. And I think if you start viewing us more as, more of a coaching financial advisor, then not only are you going to, help your business, but you're going to build a better relationship and you're going to actually appreciate that side of the business.
Yeah, totally.
Because a lot of people, they want that peace of mind and they don't really want to think that too much about the accounting side. So if you get a business coach to come in, explain it better to you, avoid difficult conversations and whatnot, then you'll enjoy that side of your business and you'll better off enjoy the other side of the business, which is where you're probably making the most money from. So,
yeah, absolutely.